Hello traders, welcome to Snipe the Trade. And today we're going to do the weekly forecast for May 14th to the 20th. And first of all, we're going to go to the economic calendar to see what's going on or what will be going on this weekend in high impact events. And this week we have some Aussie and GBP news that we need to be aware of. For example, we have on Australia the RBA meeting minutes and the inflation expectations. In the RBA minutes, we are going to know about the interest rate and the decision to maintain it, to hike it, or to lower it. Now, this is a very important meeting that's going to happen today. Now, let's see what happens on the GBP. We have CPI month over month and year over year. And we also have some NZD news that could affect, the Aussie. We also have the RBA Assistant Governor De Bell speaking, and the RBNZ Governor Wheeler speaker on Thursday. On Tuesday, I'm sorry. On the Wednesday, we have the average earning index, uh, and the claimant count change, and the unemployment rate on the UK. Furthermore, we have the employment change, the full employment change, and the unemployment rate in Australia. Now, this is a very important number, and let's go on the over the employment change in Australia right now. Now, as you can see, this has not been very steady. For example, if we go back to January 2016, we had a previous number of 75K, and we had a very negative forecast of minus 12.5K. The actual number was better than forecast, but was much worse than the previous number. And if you look closely, we on the February, the number was worse than the previous number. Only in March, the number was actually, well, March and April. In March, the number was above zero, which is good, and was above the last or the previous number of minus 7.4K. Now remember that this is employment numbers, not unemployment numbers. So a negative employment number is bad for the economy. Now, this is where it becomes interesting, right? On April, we had 26.1K jobs added to the economy, and we had a previous number of 0.7K, beating both forecast and the actual number. You can see on the chart right here that we had a push back to positive, right? From a very, very negative stance. And right now we are forecasting 12.5K new jobs added to the economy, and we are going to see on Wednesday, May 18th, if this is actually what's going to happen. Remember that a positive number will make the Aussie stronger. This number is going to be very important on whether the Aussie continues its very bearish stance or bounces off the levels that we are going to look at in a minute. Now, on Thursday, we have the core retail sales and the retail sales on the GBP, which are also very important numbers. Let's go through the retail sales. And just by looking at the chart, you can see that it is very, this number has been very unpredictable. If you look closely, the forecasts have been both missed and beaten, and we really need to pay attention on the release of this data on Thursday. Now, Friday comes with very important Friday comes as the most loaded day with USD, Canadian, GBP, and European news. Of course, we have USD news all throughout the week, and we are going to pay close attention to them. But on today's video, we are going to be focusing on the GBP and the GBPUSD and the Aussie USD. All right, and the reason we are going to focus on these two currency pairs is because one, the news that we went through right now are going to impact very strongly these currency pairs, and because they are correlated with the US dollar. all of these weeks USD news like core CPI, housing starts, um, and the FOMC speeches are going to impact them also. So well, let's go to the GBPUSD. Now the GBPUSD, and if we let me just thicken out these trend lines because we are going to go to the daily chart. And by going to the daily chart, we are going to, well, we are going to see what's really going on overall on this currency pair. Actually, I don't think that we need to go to the daily chart. We are going to maintain the 4-hour chart and just zoom in a little bit. You can see that we are in a very strong down move, and this is due because mainly of the Brexit or the British exit of the European Union, and of course, the unemployment levels and overall the inflation levels not reached in the UK. Now, what we are doing, what the reason we zoomed in right here on this chart is because this flag right here. Even though we are in a down move, the GBP/USD has moved up from this low to this high for about 776 pips. Now, these are the two levels, or the high and the low of what or what we're looking at, which is the flag. All right. Now, these are the two highs and lows that we are going to be focusing on. And the reason we are going to be focusing on this is because if we have good GBP/USD, I'm sorry, if we have good news out of the UK, well, we might see um, some bounces of the levels that we are going to look at right now. And the first level we are going to look at is the 61.8 retracement from this low, all right? From this low to this high. And as you can see, I've changed the colors of the highs and the lows of the flag because if we break with this high, where we are going to be looking at a very strong pound and a strong move to the upside. Now, if we break with the 40.23 level, which is this low right here, well, around this level, we are going to look for extreme bearish on the higher time frames. Now, remember that we still have, well, overall, the pressure on this currency is a bearish one, but we still have some levels that need to be broken. For example, right here, you can see that it was a zone of resistance, then we broke to the upside, and then we found buyers that pushed price up for about 500 or 480 pips. Now, of course, these buyers had to take some profit at some point, and they took some profit at around the 47.17 level. This is actually, if we grab some Fibonacci expansions, we are going to see that this is actually a well, a very strong expansion level. Now, let me just change the color of this expansion because what I'm going to look at right here is, let's put a red, at a 161.8 expansion of this move to the upside, all right? And if we go even further, you can see that this is a 213 of the first wave of this move to the upside. And actually, I like it better if we use the first wave of the move, because by using the first wave of the move, you can see that this retracement was actually larger or deeper. Now, I'm going to change back and eliminate the 161.8 and only take the on account the 213, all right? And right here you have the 213 in confluence with this level of resistance where, and this is where we actually had some profit taking from those buyers. Now, this is the analysis on the move up. And of course, this is what comes now is the analysis of the move down. You can see that I'm actually going to use this one, this rectangle, because this was a very strong zone and a strong that is worth noting. Because it was tested once, twice, then broke to the upside, retested as support, and then here is where we also got some buyers going on, all right? Now we encounter buyers right here at the 49.28. No, that's a 42.93 level, and again right here at the 403 level. You can see that we had a gap up, then the gap closed, and then we found buyers again. Now, and not only that, but this is the 50 Fibonacci retracement of this entire move to the upside. And as you can see, not only sellers took profit right here, but we also encounter some buyers. But I mean, if you were buying at this level, you would have had to look at price action and just look at how deep, well, these the shadows of the tails or the tails of the candlesticks go. Right, for let me just zoom in so you can actually appreciate what I'm saying. You just take a look at this candlestick right here. Let me change the color of the rectangle because this is a very the color that I use for bearishness. Now I'm just well, I want you to look at this hammer, a bullish hammer candle. Just look at how deep this well, this tail goes. It's a 63 pip tail for a body of around 10 pips. Now this is a huge rejection signal, and as you can see, buyers actually came in, but then sellers moved back down. Okay, I'm not going to go through candlestick analysis on this market preview, but what I'm trying to tell you is that we've had both sellers and buyers at these levels. We've had sellers, and now sellers have broken with the 50 retracement level, and they have also broken with this strong level around the 4403. Now, sellers are in control of the market, but remember, we still have some news to be heard out of the UK. The next zone that we are going to be looking at is this one right here, the 61.8 at around the 42.93 area. If we get a bounce, if we get good news out of the UK and we get a bounce, we can look for a well, a break of this bearish structure or this immediate bearish structure. But if we don't, look for a break of the 76.4 and a break of this bearish flag, and ultimately a break of the lows of the flag for a continuation of this move to the downside for around another 300 pips. Now, let's go to the Aussie. And what we're looking at right here is a very simple Aussie USD chart. And as you can see, we were in a very, well, not very strong because this was a very choppy way to the top of the move for around 1,000 pips, but still bullish pressure from the lows or from this triple top bottom at around the 68.35 level. Now, while we were breaking to the upside, we were testing some levels that are in play right now. And as you can see, we did break to the downside with this kind of up channel at the top of the move. This was expected, and for the time being, well, the Aussie remains under very strong bearish pressure. All right. Now, as you can see, we've come from the 95s or the the 95.10 level, and we are trading at the 78 at the 70 well, 73 levels with a visit of the 68s at the low. So this is a very strong bearish market we are at on the Aussie USD, and this is my mostly due on Aussie stances. Now, we are testing these highs right now, as you can see. And, well, I don't like where this currency pair is trading at right now. If we zoom in and put on a true level of resistance, which was tested here once, twice, three times, four times before we broke up, you can see that we actually haven't tested it just yet, and it is not well, in real confluence with the 61.8. Well, it is in real confluence with the 61.8 because they are just shy from 32 pips apart. And basically, this is the level that I will be looking at for a rejection. Why? Because this is the true level of support that I'm looking at the Aussie. Then the reason is these three tests, or these 3 or 4 tests before we broke to the upside. All right. Now, because we had an enormous buying pressure here when we broke to the upside, that was fighting with the bearish pressure, we are going to again find buyers at the 61.8. So I know that if you're looking for a rejection and a long position right here, you might have a very wide risk, but that really doesn't matter because what we're looking at is just um, risk management and uh, a percentage risk on your account. The PIP numbers really doesn't matter. Now, what we're going to do here is we're going to wait for the Aussie news. If the Aussie news come good, we are going to look for buys or for buy setups around these levels. If the Aussie news come bad, we are going, or the unemployment in Australia rises, we are going to look for further down pressure, and maybe a break of this level will be a good setup, and we might target this next level around the 76.4, and the basically these highs at around the 70.51 level for a further down move of around 240 pips. But basically, what we still need to know what's going to happen with the Australian dollar and the RBA news. And if we have good news and a bounce comes into play, look for profit taking around the 74.60 level for a 200 pip move.